hopefully we've all met before, but I'll introduce myself again. This is Jerry Sanchez. I'm a New Jersey-based multifamily investor. I focus and target on Carolina markets, particularly Greenville, South Carolina, the Piedmont Triad, and other areas now. I'm looking into Eastern North Carolina. This is actually our 3-year anniversary of this this meetup. Yeah.
Awesome. Today is the official day, or what's
it was actually last month.
Okay.
I did get a meetup note.
Okay.
That's what made me think about it. But yeah, so I started my multifamily journey towards the end of really 2019 and started researching and going down. And I first invested locally as a LP. Anthony Scandiaria, a few of us know him, great operator. And, from there, the bug happened. And then actually, literally what happened was COVID, so March 2020, I wanted to continue my education, and I ended up crashing meetups in Asheville and Charlotte. All these meetups that would have been in person were online. And the idea came to me a few months later, like, hey, let's, eventually everyone's going to go back in person, and where does that leave me? So that was the purpose of creating this, and it's become, really good source of kind of a community, get together where, virtually sometimes we have 20, 30 people, now I find it's a good core group, and we can really get to the point of, learning from each other and potentially working with each other. So yeah. Super happy to have you on. I'll let you introduce yourself. I know I have the right, but just a background on how we connected as I guess it was probably in the beginning of 2021. Arn Sinadella, one of the partners that I actually reached out to from listening to podcasts, driving into the city. I was trying to find anything about Greenville, and this gentleman from Greenville, I call him up, and a couple months later, he was looking at a deal in Easley. I got involved with him there, and then he had the cottages, we called it back then, and Andrew was also co-GP on that, and that's how we connected. So really glad to have you on, and I'll let you introduce yourself.
No, it's awesome to connect, man. It's actually really nice. It's been a few months I've done the last meetups. It's nice to get back into one, and it's also nice to have actually a smaller group. The way I kind of do these is I don't do a lot of one-way talking. I love to make it as interactive as possible. Don't expect PowerPoint slides. I see enough of them during the day. I'm sick of that stuff. So I love to just make it interactive. Feel free to interject at any time. So I'll give you a quick background, both personal and professional. I'm outside the Philadelphia area, so I am not a Jersey, New Yorker. Maybe I'm the sole PA guy here, but huge Eagles fan. So really excited for Sunday. Sorry for those who didn't make the cut in the East, but such is life. Next year, we probably won't be here. So excited for Sunday and Super Bowl. But anyway, outside of Philadelphia suburbs, 2 kids in the younger area, working wife, very understanding. On the professional side of things, I've been in the technology realm for about 20 years. Currently a CIO for a medical device company based out of Pennsylvania, but luckily work from home a lot, which affords me to really be flexible with building my investing base. On the investing side, started 2007 actually is my first house hack. I was consulting at the time, had some spare rooms in my house. From that point, from that Craigslist ad forward really lit a spark for me. Learned the power of investing. I thought, I've experimented with many single families in the past and condos, and thought that was going to be a way of life until I had a desire at one point to get a rental property or a beach property. Like, how do we afford this? So at this point, I don't think VRBO was nearly as possible as it is now. I'm not even sure Airbnb was around in 2010, 2011. It was probably in its infancy. We bought our first short-term rental then, was thinking we're going to keep repeating and rinsing that. I will tell you run out of money pretty quickly in the more expensive areas in the East. So not really a scalable or sustainable plan. Fast forward to late 2019, 2020, similar time frame to you, Jerry. I found a thread on Bigger Pockets, 60, 70 page thread, read every page of it, every word of it. I found a local syndicator who had kind of exposed me to something. I knew they were out there, this whole multifamily game. From that point forward, 30, 40 books later, 4 or 5 mastermind groups, starting a podcast, and I don't know, 1,500 or so units between GP and LP. And here we are. So that's my shotgun blast intro. So.
Awesome, man. Well, appreciate you coming on. I think that's what makes this so interesting because everybody has a different journey. Everybody also has a different focus, but there's certain commonalities that we come together. And so I guess, to talk a little bit about, we'll do a little bit of a comparison between, how, a very high level, how would you say, what's the biggest difference between obviously multifamily syndications and get, into short-term rentals?
Let's go a little bit deeper on each one. So short-term rentals, I get to ask all the time, hey, I'm thinking about starting my first or second or third short-term rental property. What do I need to know? First and foremost, it's a matter of, first, you got to have the time, right? So to find the property, usually you need some renovations to get started. You're most likely doing that on your own. I will tell you, there's options to contract that out, right? So from the management of it to the upkeep, the maintenance. What you will find is, depending on the area, that can be a pretty large, and I call it egregious percentage. Specifically, we invest in the Jersey coast. It's actually the management fees there, maybe 11, 12, 13%, not bad. The second market we're looking in to build the short-term rental base on the west coast of Florida, you're talking 30% management fees, right? So, because there's a lot of turnover, right? Like down there, they're doing 1 to 2 rentals a week, 30, 40, 50 weeks a year. It's hard to cash flow. I'll tell you that right now. The fun part about short-term rentals, and I will say it is more fun. In general, I enjoy talking to people. Everybody's happy to go on vacation, right? If you're buying in a vacation area, like most of the short-term rentals are, the fun part is, one, people are happy to be on vacation. They pay you up front. There's no such thing as an eviction because they don't get keys unless they pay up front, right? And I think the biggest benefit, if you're a family person or you enjoy vacationing in different places, being able to build rentals in different locations, you get the vacation for free. To me, that's one of the single largest benefits. If you get beyond, I don't have this many yet, but 10 or 20 units, you're likely going to be outsourcing management unless you're doing it full time. Then it becomes less fun then. So if you're strictly just want a source of income or cash flow appreciation, 100% would recommend doing something in the commercial space, i.e. multifamily or self-storage or car washes. From a purely passive standpoint, doesn't get any more passive than that, right? I know there's funds around short-term rentals. I just never really saw that as the highest potential as the apartment building stuff. But from a pure fun perspective, being at the free vacationing and just having, dealing with really fun and interesting people, you can't beat the short-term rental space. Longer term appreciation also can be pretty impactful. But the downside of that is you're a lot more hands-on you will be than even buying a 50, 100 unit apartment building with investors, which most of you on the call are very familiar with what that looks like. I don't think I need to, knowing the background of everybody's introduction, we probably don't need to go deep into the benefits of multifamily. But what I see is when I have an extra 50 or 100,000 to invest, and if I don't have a deal readily available, I am always going to a well-known operator and investing that, just from an appreciation and cash flow standpoint. You can't beat it in my perspective. What I've learned in the short-term rental space is you may think you're cash flowing for a while, but just like the single family game, 1 repair, 2 repairs, 3 repairs will wipe out 2 years of reserves. So, for example, we have a place on the Jersey Shore in Sea Isle City, if for those of you who may know the area, had a roof leak, which turned into, when we started on peeling back the onion, siding damage, et cetera. There goes $40,000. So, I thought I had a nice base build up, but that quickly gets evaporated with one property or one expensive repair. Just like the short-term rental space, if you need a roof or plumbing repairs, et cetera, or foundation structural stuff, same deal there. But on the fun side, I really enjoy, and I always have some properties to do the rental side because it's really cool to have them in different places and be able to vacation with your kids for free. And then ultimately you own the property outright. So that, it's a little bit about the short, any questions on short-term rentals? I can go more into the process. And for anybody interested in potentially buying their first short-term rental, I think I heard 1 or 2 mention that. Anybody want to go deeper into more of the systems side of things and like how to get set up on taking deposits and VRBO versus Airbnb versus doing it offline? Anybody want to go into that detail? I'm happy to talk to that as well.
I've actually been looking at short-term rentals in the Catskills, so
okay.
I would like, and specifically like not using Airbnb or VRBO. Yeah. So if you have any comments on that.
I do. I definitely have an opinion. This is but my 7th season doing Airbnb. So I've been burned. I've wasted money on fees. So what I would recommend, depending on the area, I like to do as many of the bookings outside of the system as I can, but advertising through those platforms, it's like $4.99 a year, highly worth it because you get a lot of traction. What you'll find though is that the fees and taxes they charge the tenants is outrageous. Like depending on the area, like for example, New Jersey, hotel and state occupancy tax is like 18% combined with sales tax, like 18.5%. And they charge like host fees and all this crazy stuff. They wind up paying like 25% more. If they just, sometimes you might have to do that for the first booking to get them in. They pay those fees, but the next year they can come directly to you, just do a check or Venmo, Zelle, whatever your preference is. That will save you a lot, but it's well worth, even if you don't take a lot of bookings through it, it's worth the $500 a year to just for the advertising piece on VRBO, Airbnb, but don't do the subscription, like self-managed thing. I never found that super valuable because all they do is basically just take the money and charge you a percentage, and you're paying credit card fees and stuff like that. If you get into more like 10, 20, 30, 50 units, maybe it's worth paying the fees and you're cash flowing enough. But if you're doing like me, like 5 or less or 10, highly recommend using the advertising piece, but I think the fees are crazy. Like I hate for people to pay that, right? So it's just nuts.
Okay.
We got a question from Richard in here too. Definitely interested in hearing more. What are current market conditions? How are cities regulating? Great question. The areas I'm invested in right now are really almost down to not even a submarket, but almost street by street. So if you're considering something, actually, my wife and I were scoping out properties in Fort Myers Beach, and it literally can be one side of the street will do monthly rentals and the other side of the street does weekly rentals. So absolutely, I think it's worth, in this case, working with a qualified realtor who really knows not just properties, but specifically the short-term rental market. If you're looking for someone, make sure you ask a realtor if they know the local municipalities and laws. It's a great question because that can really make or break. If you can only do monthlies, it is a lot harder to make money. I will tell you that. Like, for example, we were looking at a property pre-Hurricane Ian, obviously, in Fort Myers Beach last year. You know, maybe purchase price is $900,000, something like that. It was renting in prime for $5,000 a week for, and I'd say 18 to 20 weeks a year. You can do the math pretty quickly, right? Monthly, it's like $6,000 a month. So if you're limited to monthlies only, it's less turnover, less cleaning, but a whole lot less potential, usually for just gross income potential. In terms of market conditions, in the areas I look in, which are primarily the West Coast of Florida, Jersey coast, we haven't seen a lot of price relief yet. There's not a ton of inventory. Now it's going to be very market dependent. Like I said, they're the markets that I'm in right now, the ones I'm actively looking in. But I haven't seen as much price relief as I was hoping for, with interest rates being north of 6-7%. So I don't know if I'm being stubborn and waiting, but I'm just trying to be patient and have some cash lined up, be ready to pounce when the move is right. But I will say, like, even if you are paying a little bit inflated for a property, if the numbers still work for your plan, let's say I'm always conservative when I project, and I don't really do underwriting with short term, right? But I'll look at in Florida, 30-week market. I'll never plan on counting renting 30 weeks. I might use 20 weeks as my projection. If I can still make money with 20 weeks, paying all my fees, it's still worth buying, right? Just like multifamily, but you don't have to go through the intense T12s, T3s, all that stuff. But I like to just, you have your own rules, and I like to just back off. Whatever the realtor will tell you, I'll cut it by a third. And that'll be kind of my basis for rental projections. Oh, cool. More questions coming in. Did I answer your question, Richard? I don't know if you can still hear me, but.
I have a quick question.
Yeah.
I've got a property that we actually just built in Martha's Vineyard that we're renting out for this summer. So first time kind of getting into it.
Awesome.
I actually bought a property in Poconos. It's interesting. Somebody else said the Catskills, and ended up flipping it because the community was starting to crack down on short-term rentals. So we got kind of spooked, and the market conditions were right. So, so we made out there. But so for the Martha's Vineyard, there's it's a unique market, and there's a lot of repeat renters. A lot of people just keep going there, year over year. And we've been sort of thinking about the idea of, bypassing Airbnb or VRBO. I mean, the fees aren't terrible; they're like 2 or 3% or something like that. But the actual real estate agent fees, if you go with like the local companies, they're like 15%. And so, was just curious if you have any experience of just going directly, with repeat renters. Obviously there's the insurance angle or anything else that you need to deal with. Is it worth it to go the easy route with the Airbnb, even if it's a repeat customer?
No. Almost always with the repeats, they just come direct me. And I feel bad for them. I don't want them, because it's 3% for us. It's mainly just credit card fees, but they pay like upwards of it, depending if it's taxable or not. Like every state's different. Another thing to look at is the tax laws, depending on if it's booked, where it's booked, it might be taxable and it might not be taxable. And Jersey has changed that, but they might pay 15, 20%, depending on, again, the state regulations, et cetera. They have to add those online. So they potentially could save a lot of money. So what that means to us as investors is you can get away with a higher rental rate going direct versus booking online. So yeah, $8,000 a week sounds egregious, but if they book online, it's $10,000. It saves that money, and it's more money in your pocket, right?
Yeah, that's an excellent point. Thank you.
Yeah, you're welcome. We've got some more on here too, from Chun. You're currently a W-2 as a CIO and also managing multiple short-term rentals remotely. Do you feel it takes a significant amount of your time? Shorter answer is hell yes, it does. And I've always asked, like, how do you pull this off? And I will tell you, there's no magic bullet, right? So, number one, I've got a super understanding wife who also works 50 hours a week. I'm also a person that never rests. So, I'm up at 5 a.m, usually grinding, writing blogs, answering emails, things like that before I start the day job. So I'm pretty rigid about trying to get as much done as I can. For me, I'm an early riser, so 5, 6 a.m. I'm kind of going steady on the real estate stuff, answering emails, cleaning up the website, writing emails back to investors, looking at deal flow, yada, 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 even networking later at night. So, and then between 7 and 4, 7 and 5, Monday to Thursday, usually Friday too, pretty much heads down. The day job in my case is pretty demanding. However, no commute for me. So I'm really blessed that, like Jerry, that's another, maybe before I was commuting maybe an hour each way or 45 minutes. That's an hour and a half, 2 hours. That's my real estate time right there. So if I had to commute, man, it would be challenging. It would, not going to lie. So I do travel a lot. Like I get on planes and stuff like that. But when I'm at the airport, that's also downtime I use for, again, same type of activities. So.
Yeah, I definitely lack on the sleep, but I'm looking forward to someday where I can gain back those 2.5, 3 hours a day. Yeah, absolutely.
It's that's my real estate time right there. You know how much you can get done in an hour or two a day consistently. Saturday mornings, I might get 2 or 3 hours if I need it. Like that's my blogs and podcasts and that kind of thing. If I didn't have that, man, I would struggle. Like, cause I do have to get at least 5 or 6 hours of sleep. So, and to me, it's just about being consistent and plugging away. I mean, you guys know that. Most of you are professionals in what you do as well. So
thanks
cool.
for the question, Tune. We have Ted. He's asking one as well. I just took over PM myself on my short-term rental. The automation software is amazing. Do you rely on dynamic pricing from vendors like Price Labs?
Great question, Ted. I don't use Price Labs. I've historically, I kind of wing it, but I also use the VRBO recommendations. It's another reason to pay the $500 a year through them or Airbnb. They'll make price recommendations. So when you set your rates in there, it'll tell you if you're over or underpriced. In our markets, we're really blessed to have way more demand than I can fulfill. So every year I kind of just been bumping it up to the point where we're still booking a year in advance and it hasn't come down. So, but that's a great suggestion. I may take a peek at that to see if I'm leaving something on the table.
So you use VRBO for pricing then?
I do. In the beginning, to be honest, it was pure trial and error. I was just looking at properties that were close to ours in location with similar bedrooms, similar size, similar location to the beach. and pricing from there. And I probably underpriced myself in the beginning. I did, because I was booking and I'm like, man, I was like, what happens if it doesn't book? I was so stressed out of like, if I had to carry the mortgage completely on my own, that I probably underpriced it. And then every year I would chip away until the point where I finally got to the VRBO recommended pricing. So I probably started backward there. I should have probably used more into being a tech person. You think I would know this stuff, but maybe I was just a bit stubborn or just nervous in the beginning, you know?
So, and then another question, if you don't mind.
Yeah.
So my last property management company, they would make it a week rental in the high season and then 2-night minimum in the off season. Do you do similar?
You know, we did the first couple of years. Some of them, depending on the property, we've been using them ourselves in the off season a lot too. So what happens is we wind up bringing a bunch of our stuff down, and my wife doesn't want to like keep ripping everything back out. Depending on how heavy you travel or how lightly you travel, it may or may not be worth it. But we could for sure do better on some of these properties by using more of the off season. I find that like the rates are like in the Jersey area. Somebody asked what markets you're in. We're in Jersey and we're in Southwest Florida. The rates are substantially less in the off season, to the point where it's like, is it worth the wear and tear? You have to make that call. I mean, for example, like on the one Jersey property, like it's close to like almost on the beach. We're like $8,000 a week peak season and like $1,500 a week in the off season. Or if like nightly, it might be $300 or $400, and then people have to pay cleaning fees. It's really going to be on a case by case basis, but I think it's the same everywhere. The off season is always going to be drastically less. Yeah.
But do you have those restrictions where they need to do a week whenever they rent it?
I do weeklies only, but I probably could get more bookings for special events like Thanksgiving and Easter and Christmas and like St. Patty's Day parades. You could do, especially the special event pricing. Like, I mean, you can make a killing with like 4 or 5 times your normal non-weekly rate that way too.
Super Bowl party.
Thank you.
You're welcome. Cool.
Before we jump, I want to just, again, everyone that's joined, you definitely used the chat. Mike, Mike, Terry, if you wanted to come on and say hi before you ask your question, jump in and do so.
Hey, Mike.
Yeah, absolutely. Sorry, I jumped on a little bit late here. My name is Mike Terry. I'm also from the New York City metro area. I've been a Jersey resident for the past, I think most of my life, 25 years or so.
Cool.
And Jerry, I've been infrequent attendee at the multifamily live events that you guys have in Westfield.
Yes.
I'm in Mattawan now, but I used to be up that way in Woodbridge. But I have a couple of duplexes right now trying to scale with a partner of mine into syndications down in the Carolinas market. Jerry I sat down with Dan Schauenbach. I think I'm Schauenbacher yesterday, and he had mentioned that you had started a meetup down in the Carolinas. So I appreciate the opportunity to jump on. And Andrew, thank you for taking the time to school us on this.
No problem, man.
Yeah, definitely drop your information in the chat, and we'll definitely connect. Hey, Dan, if you're still on, you just jump on too and give a brief introduction. I may have lost him, but he's another Jersey monk.
Nope. Sorry.
I feel out of place, man. I'm only Philly guy. It's all good.
I'm only on no camera and mute because I've got 3 kids in the background that I'm watching solo tonight, and also I just worked out and look like hell. So
all good.
Don't take it personally. But
and I've been there, man. That was me half hour ago.
So I just left a career as a recruiter for financial services firms. I worked at JP Morgan, Morgan Stanley for about 10 years. I've been flipping houses. I live in Maplewood, which is about 20 minutes outside of the city, and have been flipping houses for about 10 years, but have just started to get into long-term rentals, short-term rentals, and trying to really break into larger multifamily, 50, 100 unit type deals, and specifically looking in North Carolina. Like I said, I've got a place in Martha's Vineyard, and have been doing some stuff in Florida. I've been investing on the LP side in Atlanta, Nashville, and Houston. So little mix of everything, but trying to focus in and hone in on a few different things.
Awesome. Thanks for sharing.
Yeah, thanks. So I guess we'll jump back in. I'm not sure if anyone answered Scott's question, but I also want to learn about it too. Her handling the greeting and cleaning.
No, great question. And that was one of the things that stressed me out in the beginning. I will say the cleaners are they're like the asset man. For those in multifamily, they're the asset managers. That's how I use them. They don't just do the cleaning. They're my eyes and ears in the property. They'll tell me if you have a good cleaner, they're worth, and the good ones usually charge crazy amounts of money, but they're worth it. And I'll tell you why, is they're the ones that are looking for any damage. They're looking for anything incidental, any security deposit stuff you'd pull back. They are your eyes and ears in the property, especially if you're managing remotely or you're more than an hour away. You're not going to be driving there every week anyway, or every turnover. They are worth their weight in gold. As far as the greeting, I typically just do that virtually, right? When they send their final payment, whether it's through VRBO or manually, I've got a template that goes out, a PDF saying, hey, welcome to the property, nice welcome letter. Here's all the amenities in the house. Here's a collection of restaurants. To me, that like personal touch and service is really great. Even have a binder in each property that has a list of restaurants, things to do, amusements, kids activities, things like little blankets for the kids, like a crib for the kids. We have a lot of families. I tend to cater to families. That little personal touch goes a long way. And like I got a 5-star rating almost every time. So really great. I think there's another one. I saw a related question about how do you differentiate. It's the next question actually from Mike. In a competitive market, how are you differentiating without increasing expenses? Rental costs, also a great question. I would say a couple things there. One, and I learned this by pure luck, is first, buy in a place where there's limited supply of short-term rentals. If you buy, like we're in a smaller city called Sea Isle City, New Jersey. It's only 2.5 miles wide, right? Or deep, whatever you want to call it. There's only 2,000 or so properties. And in the summer, there's up to 40,000 people there. So without knowing this, if I had bought in an Ocean City or a Wildwood where there's 50 or 75,000, there's a lot more competition, right? So it's worth looking at the supply in the area, especially where you can't build anymore, versus like Ocean City, Maryland, for example. And one of the first places we bought in, there's like 40,000 different short-term rentals there. So there's a lot more competition and people are just pickier. Secondly, I said, in terms of what you invest in, the best ROI I found is like certain amenities to the properties. Espresso machine. People love that. It's a couple $100. I mean, yeah, there's sometimes it breaks and stuff like that. You don't need to have Hunter Douglas blinds. You don't need to have decorator furniture. But hiring a designer for interior decorating for $500 or whatever hourly fee is, you don't have to go $1 million, will go a long way and just making it feel really cool. So that, the amenities, the welcome package, I think they're all good differentiators to help set yourself apart. A lot of people do it like through these big firms and they're just like, hey, welcome to the property. Here's the keys. Come on in. Like, here's fresh sheets. That's nice. But the personal touch, just a little extra work goes a long way. You don't have to go buy really designer, high-end stuff. You don't.
Yeah, the welcome package I think is great. Or having a theme. Right now, a partner I have actually in Puerto Rico, and this came from a vacation that I took twice, and then the last one, it was older gentleman, and he literally sent us a Word document with all of the restaurants because it was a part of the island that you really have to navigate yourself. And it was great. All the restaurants he gave were good. It was the where to go for the best coffee. And I think that just makes it, people on vacation, they don't want to be thinking and doing stuff. It's just, tell me where to go and make it, comfortable.
And depending on if you have families or like multi-generational families, we always have 2 families that stay with us, or like they'll have an older, so like how to use the TV. I mean, how to use the sound bar, like that kind of thing. That goes, people are like, wow, I really appreciate that. And it takes it's a one-time thing. You can copy and paste it to your different properties. So in fact, if you guys are ever curious, I'm happy to share my welcome letter with everybody. I mean, you'll have to tweak it a bit, but it's a good start. So just a Word document. I turned it into a PDF, but people seem to like it. So
that's awesome.
Cool, man. A lot of questions. This is great. What we got next? More backgrounds, I think. Less questions and backgrounds. So thank you, Richard and Mike, for sharing.
So I got a question, could be for anyone in the audience who's looking at it. I actually have this book. I don't know if you can see it. This is Avery Call, and she talks about short-term rentals and choosing in markets that they're never going to change regulation. Yeah, I think they do like Gatlin, like she's in the Tennessee, or whether obviously Jersey Shore, that's where they generate a lot of their revenues in Florida. So what about anyone who looks at other places like cities or, where you don't know, for instance, like I was looking at Charleston and like certain neighborhoods, they change. Is anybody looking into places that potentially you have to be concerned if they zone out of your Airbnb or short term?
That's a real threat,
Well,
I will say this is unrelated to answering your question, but like I mentioned this before, but I want to emphasize how crazy it can be. Tax laws change. I went a whole season one time not collecting sales tax because it was never a thing. And then some regulator decided in September, same tax filing year after the peak season was over, that all of a sudden, if you're an owner, a managing owner, you have to collect sales tax, including hotel and state occupancy, which is like 18%. And this is like a $70,000 grossing property at the time, right? Now I was liable for that. Now, the nonsense part of it is if you book through a broker, that fee didn't apply. That kind of stuff can happen. So there's always that risk there too, where with multifamily commercial property, like that wouldn't happen inside of a year. In local jurisdiction, I know Charleston has some weird, you mentioned Charleston, I don't own anything in there, but I've heard some weird stories of like street by street, like middle of the year, no more short-term rentals, or a maximum of like 6 times a year or something. So it's a risk, right? I mean, it's a risk like anything else, like depending on who's in office or who's in power, they can make these things up, or it could be building by building, right? It could be who's running the building. So I just thought I'd mention that.
There was actually a question in here that, and actually Richard had thrown it. It was at the bottom of his question, and it's interesting for the multifamily crowd here, right? Talking about and looking into converting multifamily or hotels into short term. I know some of us know Jason Yarusi, who we talked about. I know he had done something like that similar.
Mm-hmm. I will say the one thing, because I looked at on my own some smaller multis in the Fort Myers Beach area. I think it was like an 18 unit. And I went so far as start making offers, and I was going to do part of the units short term, part of them monthly, just to make sure I had some steady cash flow. The tricky part that I found about this, and this could have changed in the last 18 months, getting financing. Because your assumptions for how much that will be rented, how frequently be rented, in their minds is a lot less predictable, even with local banks, than it would be for a month-to-month. So it's something to consider, like start getting some finance quotes, and it might change your tune. It might change what you offer, what you underwrite to in that case.
Yeah. Mike throws it out here that starting to implement minimum stays of 30 in towns like Asbury Park. Would be interested to see that spreads up. And I think
I hope not.
Probably what that essentially is that a lot of people, especially the New York crowd that's coming in, are staying there or working from home all summer or turning into vacation houses. Asbury Park is a great place. When I went randomly about 12 years ago with my wife and we started to see it. And I just, at that time, I wasn't thinking of real estate. Boy, I wish I was. That's crazy. Yeah. It's a good point about towns can ebb and flow. They can definitely, Jersey's an interesting place down at Jersey Shore. We visit a lot, Lavalette, so all the beaches are public, right? But you can do little things like they make it to go and buy the pass for the daily pass. Like you have to drive to like a local park. That's like, it's interesting how they, certain towns will be favorable towards the beach crowd and, those who come and own.
Yeah. Great point. I mean, it's that the 30-day minimum that could very well come in force in many towns. That if people get sick of the riffraff, all the changeovers, depending on the tenant base, how much neighbors complain, how many police complaints there are, all those things are a factor, right? So, a couple another question around a key padlock entry. Yes, I do. They've gotten better and better. And the first one I started with was like an old school set the code, and I had to go down and change batteries, which you still have to have a look at that every once in a while and like manually set the code. Now, a lot of them have apps. You can manage them remotely. I can actually see when people come and when they go, when the cleaners arrive, make sure the cleaners actually got there. I'll get an alert on my phone. Schlage makes, for those who know the deadbolt company, they make some really nice products. I think it's the other one's Yale. Amazon's probably got a million options out there. Well worth the $200 to spend on the smart locks. Another same related question was, have you used an outsider that would check people in or out via code if it's sent to smartphones? I just do that myself. You could do that through a booking agency, but they'll probably charge you the full 15% of gross revenue, which if you want to do that, fine, but these smart locks now will generate a new code every week and it'll expire at a certain period of time. So for $200, and back to the cleaner thing, they will most likely change your batteries for you if the batteries go dead. So cool. Jerry, you got a question. How will you handle negative reviews? Have you ever had feedback from guests and maintain a positive reputation? I can honestly say I've had maybe only like one or two negatives out of maybe 100 or so. And maybe that's luck, but you're bound to have somebody bitch about something that is or is not valid. You know how the online reviews go. But I always try, like, again, going back to my professional career, people get fired up with all kinds of things. I think it's always great to stay calm, cool, professional. Hear that most people just want to be heard, right? You don't always have to, you never want to attack back. Whatever you write out there on the internet is permanent. So it's good to remind yourself of that. But thankfully, haven't had a lot of riffraff. I mean, I think the one good way of ruling that out, and it's not foolproof, I always talk to people on the phone before they book. And it's like you get that, either you get a spidey sense or like they just sound like you get a lot just from talking to somebody for 2 minutes on the phone. I always call them and say, hey, welcome to the property. I'm so happy you booked with us. And 9 times out of 10, it's fine. There's some times that I'm like, not getting a good feeling. It's much better than over email. So that's a good way to avoid having a bad experience in the future. So, but I've had some weird people complain about like one person was like, oh, the one bed was really hard. The springs were digging into me. I'm like, dude, they're memory foam mattresses. There is no springs. And he insisted that there were springs in the mattresses. Like crazy shit like that. I mean, statistically, if you have enough rentals, you're going to have some kind of issues,
Absolutely.
So multifamily, short-term rental, doesn't matter. You're going to have some crazy stories over time. So, yeah. What else we got out there?
How about insurance and things like that you're required to have?
Oh, yeah. Now, I will tell you, the game has changed in terms of flood insurance. So if you're looking in beach properties, a lot of places now, you don't have multiple choices for carriers. So Florida, man, multifamily is no different, right? What we used to pay $300 a door, $400 a door, might be $1,000 now. I got a quote for a place we're going to put a bid in Fort Myers Beach again. It was a block or two back from the beach. The owner I met the owner directly. He's like, oh yeah, I'm paying like $6,000-7,000 a year in flood insurance. I'm like, it's high, but not that high. Got a quote, $22,000.
Wow.
So the biggest watch out in terms of insurance, you'll typically get 2 policies on a VRBO, Airbnb, short-term rental. One will be your HO6 policy if it's a condo or a townhouse, which will be all your contents, walls in. And the second will be actually 3 policies. Second will be flood insurance if it's relevant. So if you can avoid flood insurance, absolutely do so because it's by far the most expensive. They don't cover anything. And then third will be like your commercial property, like building, fire and hazard. That usually will be like mid-price point, but definitely get quotes. Do not rely on anybody's word of mouth because they can vary wildly, especially if there's a past claim on the property like fire or anything like that. So great point. I missed one around cameras. I don't use cameras. I've been in properties where they use them. I always felt it was weird. Now that's just my personal thing. I can see why people want to see people come and go, but I never wanted anybody to feel like they were being watched, especially inside the property. That's just strange. On the entry point, sure, I could see that. I feel like having families and stuff there, that just, to me, that's strange. So I don't use cameras inside or outside. I could see the entry point making sense to see when people come and go. However, you can ring doorbell like that. You'll know if somebody's coming or going. It's a little less intrusive than like a big, security camera staring you in the face. And it's less obvious if you're going to do it. So I think maybe like a ring doorbell would be pretty cool. So yes. Great questions. It's a very lively crew you got here, Jerry.
Yeah.
Yes.
I got more. So if anyone else.
Yeah.
How about
we didn't talk a whole lot about the comparison, but we're going deeper into short term. But I think most people on the call seem to be pretty well versed in multifamily, and we're happy to throw out questions there as well. But I think we're all fairly experienced in that area as well. So happy to go either side. But we've been going deep on short term. That's totally fine.
So Scott is asking about any other injury protection, like for a breaking or a mugging on a property.
Two things there. One is I always get an umbrella policy equal or greater to my net worth in general. Like that's my first line of protection. Second, on that middle insurance policy I mentioned, the commercial insurance, which is usually like fire and hazard, they will have you can get a commercial liability clause, but you can also get renter's insurance there or landlord's insurance that will protect you for personal liability up to a certain amount. They usually only go up to like $500K or $1 million. So depending on your situation, you may want to add on a umbrella as well for extra protection. I certainly do. And we have a pool here at our own personal house. Like God forbid something happens. I do it for the same reason there and just a good CYA. So, and there's all kinds of different riders you can get like theft and, if you have any kind of expensive electronics, you can get theft coverage there and things like that. I don't put anything to it pricing there, so I don't worry about it too much. So, yeah. Jerry, fire away.
So how about decorating furniture? And also, do you look for a specific type? Could it be like a 2-bedroom or, like what are you kind of targeting?
I like to do themes. I'm not a creative person, right? By trade, I'm an engineer / tech nerd. I am not an artistic person, so I gladly will pay an hourly wage. And I've learned that I got strong feedback from my own home from my wife. She's like, "What the hell is it? It looks like a bachelor place." So I like doing a theme, and I think it's well worth paying a designer 5-10 hours worth of work to come in and lay out like, hey, I want to do a beach theme. I want to do a mountain theme. I want to do a Catskills theme. And she or he will have you pick colors and a theme, and then they'll still throw out some ideas. And there you can kind of piecemeal it together. It doesn't have to be expensive, but getting the colors right and getting just everything to work together well. I'm not an artistic person. I will gladly pay. I do think it's worth spending the $1,000 or whatever it is to have somebody kind of give you a theme and design. Unless you have that skill yourself and go all out. For me, not my skill, my core competency. That's for sure. So
yeah, there's so many talented people that just have the right eye. It's just worth it. Yeah.
Yes. Agreed. Question around setting up direct booking. How do you collect funds? How are you promoting and push social media? I've been mainly using through VRBO, Airbnb, or after I get repeats after a year or two, I'd say 60-70% of them come to me direct, and I just do Venmo, or a lot of them are old school. They want to send me a check, which I just do mobile deposit and account. There's tons of websites. Fiverr is a good place to go if you want to just build you a site with, e-commerce payments on there. PayPal, they usually use PayPal or Zelle or Venmo or one of those back ends to do payment processing. You're going to pay fees, and they'll usually charge transactional fees, which is why I always prefer to go direct. And again, if I had 100 properties, I might think differently. I might just be okay with the fees. But if you're like me and you're managing your own portfolio, I'm all about just not throwing money away. So less convenient, but once you have a system in place, it's really not that bad. And as far as promotions, generally I don't go heavy on that unless I have a last minute vacancy, and it depends on situation, but most of the time they're booked well in advance. I don't have to go through that. Like VRBO and Airbnb are pretty well marketed already anyway, and most people will Google or go there first anyway, it seems. So unless it's friends and family, then you're looking just to like, hey, I got a spare weekend or I got a last minute cancellation. Yeah, Facebook, LinkedIn is a good place to throw it on there. So Instagram now too. Maybe even TikTok. I don't know. Yeah.
Any more questions? Make sure everyone use the chat. I got a few more hitting you up now. There you go.
Yeah. Wow, you guys aren't shy. I love it. I love it. Next one from Scott. Have you done other areas and types outside of vacation rentals? Scott, I assume you mean short-term space or like long-term rentals? Yes. No, everything we've done on the short-term space has been in vacation areas. Now, other friends of mine have done areas like city type areas where they go after like big conventions, which can be really popular as well. They're really great. The tough part that I've heard, again, this is not my firsthand experience, is getting the pricing right for events, because a lot of times you don't have the right comps to do that. So again, I like to buy places where I like to vacation anyway. So if I want to use it for ourselves or the family, then it's like kind of a free place to stay, and it's a second or third or fourth or fifth home. That's really cool. So that's just my personal thing, but there's plenty of opportunities out there in cities. Or I have a friend right now who's renting her place in Arizona for the Super Bowl for $15,000 for the weekend. Seize the day, right? I mean, that's great. It's not a normal vacation area for her, but she's taking full advantage. So yes. Another one, how far open your counter? That's actually a good question. I get burned with that from time to time. And I go a year out. I start the next year at the end of the season. So I've had people want to ask me about like 2025, 26. I'm like, I personally don't feel the need to go out that far. So I go about a year after the end of the peak season, any given point. So yeah.
How do you manage your own time? And did you sneak in there? Do you always do it off season?
Yeah, primarily. I try to convince my wife, I'm like, we should go down, like at least 4th of July is something I've been asking to go down the shore. And she's like, I'm not giving up that income. She's like, it's too crowded. So if you're not into the crowds and you're going down to peak season, the same for Florida, like we won't go down in most likely ever in December, January, February, because like one, that's like the opportunity cost is too high. Two, it's so damn crowded at the beaches down there then, you know? So, but yeah, and it depends on where you're at. Like as we get older and the kids are going to college and stuff, I could see us really taking a few months at a time and going down there and hanging out, which would be the plan. And by that point, you've got half the equity built in. I mean, you have a lot more options. If you refi at that point, your cost base is a lot lower. So it only gets better.
Do you and your wife team up like responsibilities on this?
No, I wish. No, she does a lot of heavy lifting with the kids and stuff, and works a very senior level W-2 job as well. So we're more of a divide and conquer couple. So she handles a lot of the house stuff at home, does a lot of the kids' activities. I try to lean in as well, but like she does the bulk of that, and I do for sure almost all of the real estate stuff in general, whether it's multifamily for sure. Although she is a good source of investors, I will say that she spreads the word and she's a good marketer. So that's her role.
Awesome.
Yeah. Anybody, if anybody's interested in just like general partnerships or, exploring new markets, reach out. I mean, I'm always open to new ideas and, co-funding, GPing or just short-term rental stuff would be more of like a 1 or 2 partner situation, but like a JV, but always open to that.
So let's talk a few minutes about multifamily. What markets are you in?
Great question. So Jerry, we're in Greenville. I started out kind of all over the place. Like I was dabbling in West Coast, et cetera. I've narrowed it down. I really like the Southeast and specifically the Carolinas, Georgia, and Florida. I have a property in Louisville. Like that market too, but I'm really just trying to get really picky. I know it's really crowded and populated and very competitive, but I'm going to stick to the Carolinas, Georgia, and really Carolinas and Florida are where I want to stay in the next 10 years.
Excellent.
Yeah.
Oh.
Yeah. I like to being able to get into a plane and be at any property in an hour or two. There's just something nice about that. As much traveling as I have to do anyway. It just seems a lot more it's a lot easier to manage and be able to get to multiple properties in the same area rather than flying to Arizona or California or Colorado. There's lots of great markets in Arizona, as you guys know. But really like the East Coast. I'm an East Coast guy. So
all right, Mike's got a good one here. So sorry to pivot, but yeah, no, we just pivoted into the syndication. So with today's fixed rate debt significantly affecting cash flow, what do you feel is a realistic expectation for LP preferred returns if they're being offered, and cash on cash in general?
Man, that's a tough one to answer. I mean, investors have different expectations depending on where they're at in their journey of their life, right? I will say that I feel like the days of underwriting to 20% IRR are becoming very, very challenging. And I will say that the expectations I've set with my investors is in the lower double-digit range from here on out. However, I'm also a big fan of mitigating risk with fixed rate whenever possible. Arn and I actually share that philosophy, Jerry. So I'm not a fan of, and even before all this crazy stuff going on, I was just a fan of, at the expense of some return, locking in fixed rate debt. I'm a big believer in it, and I always will be. I know I'm leaving some upside on the table. My buddies always say, hey, bridge is the way of the world. I like to play it a little bit more conservative with that. So I'd say in general, if I had to generalize expectations, I've been setting, more of the 12, 13, 14% IRR expectation with, 4 or 5 year exit with different exit strategies out there. So how am I hedging risk and exit cap rate projections with current market? Again, this rules me out of a lot of deals, but a lot of times, one, I'm not factoring any rent growth in for years 1 or maybe 2. And second, exit rate cap, I might have projected in the past 100 basis points. Now maybe it's 50 or less. And I lose a lot of deals that way. Such is life. The benefit of having a steady, stable W-2, which does well, is I can be picky as heck, So if I do 1 or 2 years deals a year, great. I don't need to do that. And that's the one thing that people don't talk about is living this dual life. It's stressful as heck. But you can be picky as hell with your deals, which is great. I don't have to do a deal. I don't need an acquisition fee. And my investors love that too. Like, great. I'll wait. When Andrew's ready to invest, I'll invest with him. I don't need to do 5 deals, 10 deals a year.
It's a good point.
Cool. Yeah. Scott, looking forward to catching up on the JV piece. Sharon, how much cash do you need to get into an investment group? Sharon, I'm assuming you're referring to multifamily or like shared pooled funds with short-term rentals. Could you elaborate a bit? Maybe that I'll assume that's a generic question in terms of like a syndication fund or an individual opportunity. And Jerry, feel free to weigh in here as well. We'll typically have a range minimum on multifamily. Thanks, Sharon, for clarifying. Let's say 25,000 to 100,000, depending on the size of the deal and how many partners we are and what market it's in and what's going on with the property and what classes we're raising for. But I'd say a general range, Jerry, you can weigh in. Average is probably 50,000, minimum 25 up to 100. If we're raising $40-50 million and we're limited to a certain amount of investors in a 506B structure, for example, and I'm getting technical now, we might do 100K minimum. But we're always flexible with that. Jerry, feel free to weigh in as well. So.
Yeah, no, absolutely. The 25 to 50, usually a minimum. And again, depending on also the property, the type of property, A class, and the type of accredited investors and things like that. But yeah, definitely, Sharon, drop your information. And, if you need more, we'll definitely reach out and connect with you.
Awesome.
So we're hitting up on the hour mark. This was awesome.